Hello, everybody, and welcome back to the show. Today's question is, how does Bitcoin fit into your investment portfolio? Well, this is a great question because you have so many different options. You have real estate, you have stocks, you have bonds, and now you have cryptocurrency. There's so many more investments, but these are some of the four major plays that people have as options for investments. So I would have to say that unlike the stock market, okay, which happens, it opens and closes at set times during the week. Bitcoin is accessible to buy, sell, and trade 24/7, 24 hours a day, 7 days a week, along with all the other cryptocurrencies. That's great. That's absolutely great. Especially if you're someone like me who gets really anxious because the markets are closed on Friday for the stock market. So this is a great option if you're somebody who really likes to get to work and place some trades over the weekend. Crypto investors can access Bitcoin on a number of cryptocurrency exchanges. That would be a topic of a different video, but there's so many different cryptocurrency exchanges in which you can buy and sell Bitcoin. Now, while you can make crypto trades at any time of the day, it's best to participate, in my humble opinion, in the crypto market when activity is very high, because this ensures enough liquidity to get a favorable price. Some investors have turned to Bitcoin because they see it as an uncorrelated asset class with stocks, making it an option as a portfolio diversifier. Okay, it's always good to be diversified in your assets and in your investments. So, however, since Bitcoin's price is very volatile, which means it can go up and down very rapidly compared to many other asset classes, experts say having a lower portfolio allocation to Bitcoin can help boost the returns without having too much exposure portfolio to the losses. Okay? So, and this is very important concept to believe in. Okay? So, retail investors such as you and I, if you're watching this video, I'm sure most of us are just retail investors. We should limit their holdings in Bitcoin to I would recommend 1 to 3% of their portfolio, since it could lose a lot of its value in a short amount of time, obviously, right? So one of the biggest reasons for adding Bitcoin to a portfolio is having exposure to cryptocurrencies, and Bitcoin is the largest cryptocurrency and the first cryptocurrency. And it can be a non-correlated asset to the existing stocks and bonds in perhaps your traditional account that you have already. So it adds some diversification, and it adds a new asset class to your portfolio. Now, there's a recent evidence that Bitcoin's correlation to stocks is increasing, especially as more investors, both individual and such as you and I, and institutional investors, come into the crypto market, and as a more Bitcoin-related investments become available to a wider audience. So there are several ways to get exposure to Bitcoin. Okay, if you believe in investing directly in Bitcoin, if you think that would add too much risk to your portfolio, you can invest in a Bitcoin exchange and fund like an ETF, like the ProShares Bitcoin Strategy ETF, ticker symbol BITO, or the VanEck Bitcoin Strategy ETF, XBTF. Okay, and they are not sponsors. I'm just throwing out some information for you. Okay, so they're not sponsored this video by any means. Okay, investors also they can add Bitcoin stocks or companies that either work in the cryptocurrency industry or have Bitcoin on their balance sheets. Some of these you might have heard already include the Coinbase Global, ticker symbol COIN, Coin, PayPal Holdings, PYPL, and of course MicroStrategy. Okay, this strategy allows investors to add Bitcoin exposure, and while simultaneously managing your volatility risk. So let's wrap it up with this. Investing in Bitcoin, it can be very challenging. Okay, it can be also very intimidating for many new investors who are new to the space. But for some of us, because of the large fluctuations in the price, it's maybe not such a good idea if you can't handle the risk, and if you prefer something more stable, then maybe cryptocurrency or Bitcoin is not a good investment for you at this time. Okay. The volatility of Bitcoin is far greater than that of most stocks. Okay, maybe penny stocks or small cap stocks or some growth stocks might have a lot of volatility, but typically not like Bitcoin or other cryptocurrencies. Which this makes Bitcoin, it's a riskier asset, but its historical outperformance to the S&P 500 encourages many investors to take on some additional risk in exchange for some potentially higher returns. And so there's many reasons Bitcoin is volatile. First of all, there's speculation around the future utility of Bitcoin and the cryptocurrencies. And so you just need to look at it. If you want to invest in it is a very good vehicle for someone who is truly, willing to take on that risk, either in a bull market where the market's going up or the bear market, okay? And, other things are speculative as well, okay? You can only speculate on the future price of Bitcoin because it has no intrinsic value, such as gold, okay, which is the typical historical store of value for worldwide investors. And so it's similar, they call it the digital gold, but it's more speculative and it's more new. Gold has been around for thousands and thousands of years as a safe haven asset. I hope you enjoyed this video today. Subscribe to the channel, click the like button, and hope to see you soon.